Hey everybody, and welcome to Stock Abilities. Today I'm going to be covering the Dave and Busters bankruptcy news. A little bit over exaggerated. They did shut down a lot of stores, but they did also start to reopen a lot of stores. A lot of drama going back and forth. They say they're worried about bankruptcy, but the reality is that this is a unique market share opportunity. There isn't a whole lot of other companies on the entire stock market, rather, that really do what Dave and Buster's does. If you guys aren't familiar, they're basically the equivalent of Chuck E. Cheese, but more of an adult version. Obviously, with physical locations being shut down, that limits their operations, but does that limit their profitability in the long term? Probably not. If they don't make a deal with their lenders, they might go bankrupt. Unfortunately, I don't really see that as an, an actual outcome for Dave and Buster's, but we'll see how this plays out. Ultimately, they're probably going to do some offerings and do a little bit of a pump on their shares, like they've kind of been, and that in turn is going to cover that aspect of debt. This is a big market. There's a lot of potential for companies like Play. This year might be a little rough. In the coming years, there's a lot of promise, and I'm going to go through all of that in this video. So make sure to watch through till the end of the video. Feel free to comment below your own input on Play, aka Dave and Buster's Entertainment. Something to keep in mind is that Dave and Buster's, although a little bit in the red, is actually almost more profitable than the recent Snowflake IPO. So take that into consideration, that they're valuing a company that does cloud computing that generates zero revenue at billions of dollars. Yet this unique market share opportunity for Play is valued at, pretty much nothing comparatively. And there's a lot going on that people tend to overlook in this valuation, but we're going to just jump into some basic financials. That after Dave and Buster's second quarter revenue plummeted an eye-popping 85% compared to last. The company announced last Friday, falling from 344.6 million to just 50.8 million. That's kind of significant if you think about it, but at the same time, a lot of their businesses were shut down, so they're still generating at least some revenue. Not very much, not nearly as much as they were, obviously, with such a closure and shutdown of a lot of their businesses. I feel that essentially they're going to slowly pick up, and I'm going to get into that here in just a second. But some of the previous things that they were considering doing was selling shares. You saw a little bit of a pump up, and then they probably are going to be doing offerings soon just to cover that. Uh, Setting a deal with Jeffries to sell up to 75 million. So they're already doing the offering actually, and it's to help raise capital to keep their company from bankruptcy. Now, is it going to actually bankrupt? I mean, that's always a possibility with companies like this, but in the longer term, if it's not Dave and Buster's, it's just going to be another company in this particular sector. You know, as they said, the shutdown, including the closure of our stores and resulting impact of the closure on our revenues, profitability, and ability to meet debt covenants could continue to have a significant effect on the market price of our common stock. And then they furloughed and closed a lot of their stores. They 648 million in debt. This was in April. They raised some cash since then. And then we have been thoughtfully and quickly implementing a comprehensive plan with one simple goal. According to a transcript on financial services site Centio, reopen our stores as soon and safely as we can to welcome back our furloughed team members, turn our games back on, bring fun in the communities we serve, some that will we believe will be very important as our company surges from this pandemic. Some things that they haven't really been tapping yet that they could be. Market share already covered with you guys. It's unique market share aspect. They take a big chunk out of that, but they're not really touching the augmented reality market much yet. They're not really touching the virtual reality markets yet. These are huge markets into the future, so if they can last through this year, maybe next, that in the next 3 to 4 years, if they start implementing things like augmented reality tech, virtual reality tech, these are big markets to be getting into, projected worth in the multiple billions of dollars. These companies run a restaurant, they make monies off the food that they sell. They make money off the machines that they utilize, to entertain their customer base. But if they start implementing more tech like this, I have a local place near me that's been slowly basically adapting virtual reality tech, and they've been making a lot of monies off of just that in particular. And people are getting really excited about that kind of tech. And into the future, that's going to be a very promising tech to have and be associated with, as these are both very, very strong and growing companies. Uh, not company sectors, but you get the point that this is a unique market share to said market. And Dave and Buster's is one of the few companies that actually focuses on more of the adult aspect of that entertainment, whereas a lot of other companies, they're focusing more on the younger audiences. This isn't so they could theme all of this AR and VR tech into a much better and a much healthier company into the future if they just adapt the AR and VR markets tech into their company, if they are able to raise funding and stay afloat. They had a recent huge dip from that news of the bankruptcy. They went down to $12, $13 a share. They're back up to 16 today. And I believe that they're going to honestly continue on back up higher. They're following the same algorithm as cruise lines and defense and just restaurants in general. And they're still way down on the year. It's not like they're overvaluing the company where it is. I mean, it took a hit and they took a 70-80% hit. So they're almost fair market value even at this point. And then with future guidance, it's going to be kind of hard for them to actually miss their next guidance. Whether they're going to still be around then, that's up to you guys. But they have a debt relief deal with lenders currently till November 1st to stave off bankruptcy. But I don't really see that being a realistic scenario. Recently, they had, as of September 9th, reopened 89 of its 137 stores. My guess is that into the holiday season and into early next year, you're going to see a lot of positive guidance with this company because you know, they've been hit so hard that if they get out of this bankruptcy rut, they have a lot of chance to grow from that guidance. So pretty much anything that they say that's positive at this point is likely going to jump the share price quite significantly. Now today looks like, hey, look, it's been a nice recovery, but the reality is this is just short sale restriction. If you guys aren't familiar with that, when a company hits below 10% down on a trading day, it tends to restrict the shorts from doing a whole lot. And that in turn creates a short squeeze. And that's what I feel that we're seeing today. So it's better to judge what this does in the next weeks, months, rather than what it did the day after a 26% drop in just one day. So you can see here, it has its ups and downs, on the year to date, on the yearly, on the multi-year, but ultimately they're about as equivalent of their drop valuation as they should be. So we might see a little bit more of a downturn. You might see the 11 to 12 range. If you see under 10, I would personally recommend to consider holding it as a long-term investment. Yeah, I wouldn't risk your whole portfolio on it, but in regards to basically simply if they adapt themselves to the AR markets, uh, this is projected to be 70 to 80 billion dollar niche or sector by 2024. And then you have the 20.9 billion by 2025 for the virtual reality market. So these are very, very big markets to focus on. And if they put the efforts in to actually adapt into these particular sectors, in a more extreme scenario, even if they started doing something like that today, where they announced that this is something that they wanted to focus on, this would get them the market share valuation that would get them the capital in order to stay in business, stay afloat, and then grow from there into the long term. They've been around, at least IPO'd since 2014. They've been around since the 80s overall. So they're likely not going to be bankrupting anytime soon. This is a company that's been around for, let's see here. This is 2020, 2010. That's 10 years. 2000, that's 20 years. This is a company that's been around for almost 40 years. So they're likely not going to be bankrupting tomorrow, next year, next month. They have a lot of connections in this particular niche. I personally didn't even realize they were around this long, but you know, whether you see that value in this company is up to you. Personally, I feel it's a good investment, but I'm going to wait.
All right, let's bring in Bill
I'm going
McGurn.
to
He is
wait
a
here
Wall
a
Street Journal
little bit
columnist
here. Shrink that here. But that's about all I wanted to cover in this video. I lost my train of thought there for a second. And generally, if this is a niche you want to be in, it's worth it, in my opinion, but for a long-term stay. I wouldn't expect this to rebound, next week or next month, but by the next year, late next year, you should see this close to over $25 a share, if not more. And then it's going to slowly progress higher and higher and higher. I feel that eventually they're going to retest their all-time highs, and that in turn is going to get a lot of return on investment if you're getting in this early. So that is something to consider. Thank you for listening into this video, and feel free to comment below your own input on Dave & Buster's and what you think of its future and into 2020 and beyond. Have a nice day and see you later.